Hi there, guys, and welcome to this week's midweek with Indiacharts. Today we are here. We're going to discuss about how the market is placed and what we can expect moving forward. I will quickly just start with the video. So today the CPI data is likely to be released after we record this video. So what is the expectation? Is Fed done with the rate hike? Are we going to see more hikes in the future? Is the US market bottomed out, or is the worst not over yet? What is the scenario?
Yeah, so CPI data is going to come by today. So the expectation is that 5% would be the reading that we can expect. And if there is a surprise on either side, so the market might react a bit, violently. But the expectation is that it will be around 5 and it is likely to come over there. And in that sense, I don't see any much surprise or a big movement because of that. Uh, and if there is no negative surprise or a positive surprise or from the data, then you can expect the Fed actually to pause because in the last meet they changed their language a bit, and from telling that the ongoing hikes are appropriate, so they have said that we think that the major part of the hike is done. Now they are very much data dependent, and if they see that things are getting out of hand, or there are few data that might still indicate that inflation very hot, the inflation is very hot, then only they might end up hiking the rate. But I think the major part is done, and don't expect the hiking from the Fed now. And also because we have seen a lot of issues in the bank also cropping up because of that, and that is where Fed will even take note of that. The only thing is that now that the Fed has hiked the rate, I mean, there is a chance that it can keep the rate higher for longer. Okay, and now whether that will impact the market or no, that needs to be seen. But so far it hasn't had any impact, because if you're seeing the job data, that is still very strong. The unemployment rate is at 3.4%, which is almost around the lowest point. So there is no slowdown sort of thing that is happening in US as of now. So let's see. I mean, don't see any negative surprise on the CPI, and due to which there shouldn't be any major move. Now I'll just quickly share the setup of S&P, because it is at a very interesting point.
Yes.
I think when we had last discussed, we had mentioned that this is the range, that is 4150 to 4200 range on S&P. That is extremely important to be taken out on the upside. If that happens, then we can expect some we can say bullish momentum that can pick up. That is because if you see the CFTC positioning, that is the commitment of traders, I mean, they are, I mean, net short for this reading is basically highest for last 6-8 years now. So we can expect a very good short covering rally as well, but provided we see S&P breaking out of the resistance zone of 4150 to 4200. Now, why this level is also important, because when we see the monthly chart, the 20-month average is exactly around that. Okay, so we are having right now a bullish crossover in the RMI indicator, which is basically a proprietary indicator. But this needs to be confirmed by S&P, closing above the 20-month average. And that is nothing but it is around that range of 4150 to 4200. So if that gets cleared, then the moving averages will get cleared, the resistance zone will get cleared, and that can lead to a massive short covering, I think. Because like I showed you over here, the shorting by the fund managers, I mean, they are at the highest right now. I mean, basically the shorting from the hedge fund, it is at the highest point right now. So it is like almost everyone is expecting that the Dow Jones will fall. And typically we have seen that when we see such extreme sentiments, we usually see a move in the opposite direction. So that is how the S&P index is poised at this point of time. So maybe, looking at the data, I mean, if there is a positive surprise, okay, say for example, I mean, CPI comes to around 4.5 or something like that, then I think there is a good chance that the range can break on the upside. But however, like I said, I don't expect any major surprises from the CPI. But the setup definitely looks very interesting. And if 4200 is taken out, then we can see some good run in S&P 500.
Correct. Makes sense. Moving on, I wanted to talk about this currency dollar. So it seems to be in a range at the moment. So I need to understand what's going to happen with it. While talking about dollar, you can also give us a brief of how gold and silver is placed as well.
Right. So like you see that in S&P, it is almost in range. So basically,
Correct.
what is happening right now is that we are not getting any cues at all. I mean, just like S&P sideways, if you see dollar index, that is sideways as well. So when we last spoke, it was somewhere over here. And in fact, we were anticipating that it will cool off and it will go down. The RMI
Correct.
also, gave a negative crossover, but the low was not breached, which was around this 130 level. Once I think that gets taken out on the downside, that is where you can expect the dollar index to move as low as 96 or 95 sort of levels, because that is the equality level, I think, of the of this entire decline. So if that happens, dollar index breaks the low of 100 and 100.30. So to be very precise, it is 100.33. If that is taken out on a closing basis, then you can expect some correction in the dollar index. And if that happens, so if you see over here, gold is also stuck in a range. So apart from this big spike which had happened in the night, but apart from that, if you see, gold is also in a range. So if you see across the sectors, it is looking like it is waiting for something to happen, because everything. I mean, if you see S&P, it has gone in a sideways trend. If you see gold, silver, this is the chart of silver. Even you can see over here that it is stuck in a range. If you see dollar index, it is stuck in a range. So everything right now over there is in a range, and it is waiting for something to happen. I think the dollar index should eventually break on the downside. So that should lead a positive momentum in gold and silver. And that should also lead eventually to a breakout of S&P on the upside. So that is the expectation right now. But like we have mentioned earlier as well, I mean, the setup of gold and silver looks very good from a medium term perspective. It is just that right now it is in a range, so I'm not too sure if it is going to come back to test the 40-day average and only then pick up, or it is going to pick up from here. So that is the doubt that is there in the short term. But from a medium term perspective, I think I have discussed this couple of times. 2050 to 2070, okay, this is the range. I think once that is taken out on a closing basis, gold is likely to see a very good move on the way up. And I think that may happen only when we get that trigger from the dollar index, which is breaking off the low of 100.33 on a closing basis.
Correct. Makes sense. We're looking to see where the dollar index eventually breaks out at. Moving to the Indian indices, the market has currently been rallying. A lot of people have missed this opportunity as well. I've also read a few
Right.
comments that still state that there is some fear still left in a lot of people from wanting to invest or regarding the Indian market. What are your thoughts on this?
Yes, so one thing is for sure, I think many people have, I mean, they did not anticipate such powerful rally from the low, but I think we have been highlighting. So if, someone is surprised, they should actually see this data. FIIs were net short. I mean, they were record short. Uh, we have the data of around 10, 12 years. So it
Hmm.
was net short. I mean, they were record short, and we were, highlighting this as well. So
Correct.
the moment it turned around from this 1,95,000 odd contract, so that is where we have seen the rally in the Nifty index. Now, more or less, this trade has played out, wherein the shorts by the FIs, that has been cut, and they are more or less, back to the 0 point, wherein which is more of a neutral data. But there is one more interesting data which says that the up move in the Nifty index is not over yet, and this is the volume put call, and this ratio is nothing but 14-day average of the raw data. Okay, you can see that in the past, whenever this data had a very high reading, it was followed by a meaningful bottom. Okay, you see over here, there was a meaningful bottom. Now this time around, okay, over here as well, when the reading was very high, okay, which was around this point, we saw a rally. Okay, but in this decline, this ratio, that is the put call or volume put call ratio, this surged to a record level, and this is a level which we had not even seen in 2008. So we are yet to upload the data over here, but even in 2008 we had not seen such a big reading. And you have seen that whenever such major tops have occurred, it has been followed by a good rally. Okay, over here as well we saw a decent rally. This actually marked the bottom and we saw a massive rally. So over here, at this low, the pessimism is very high. Okay, that is why this ratio is high. So I think once this ratio starts cooling off, that is when there will be a recognition among the people that the worst is possibly over. And because so when this ratio is very high, it actually tells you that there is a lot of pessimism amongst the people, and that is why they are buying a lot more puts. And right now we are seeing this ratio high. Okay, that means that people are still buying put, because this is volume put call ratio. Okay, which means the volume in the put, I mean, in the value terms, is actually going up, and that is why you are seeing this ratio high. So this is still telling you that people are fearful, and that is why I think once this ratio cools off, only then you can say that maybe we might be topping, and that too, it took almost 1.5 years from this high point to this low point. Okay, so that is where, I mean, these are all medium term indicators, and it is telling us that maybe we have put a major bottom at this low, and ideally I think this should not be broken on the downside. And if that does not happen, so what will happen is that, see, we'll get some minor corrections in between, but Nifty should likely to hold on to its gain, and it should ideally be much higher from current levels, say in next 1 or 2 years. Now see, this is the short term indicator, which is the daily swing. So daily swing is nothing but uh sum of, I mean, it is a basket of FNO stocks for which we gauge the momentum. So it is nothing but a diffusion indicator. So if this is declining, okay, this daily swing is declining, that means the momentum is declining in the FNO stocks. Okay, so that is where you can see some minor corrections happening. Okay, usually this ratio, I mean, this daily swing reading, when it comes to around 10 to 20 kind of level, that is where the market bottoms out in the short term. But again, like I said, this indicator is very, very, very short term indicator. Okay, you cannot read much beyond that. So over here, there is a chance that we might get some panic in the market, and this ratio and this reading goes to 20, and then we bottom out. But that is it. I mean, I don't expect a very major correction in the short term. It can correct, say, couple of percentage here and there, but I think a massive bottom has been made around this low, because like I said, even the volume put call ratio which I showed, that was at historic level, just like the participants the participants data wherein FIIs were net short, like it was a record short. Similarly, this ratio is a record on the, I mean, record that we are having right now. So if it cools down, it is an indication that the market is likely to inch higher, and that is what it is showing right now. And that is where we expect that in the short to medium term,
Got it.
The trend should be bullish and we should be heading higher, and there will be minor hiccups in between, and probably those will be buying opportunities.
Got it. Correct. So people do have buying opportunity if people think that they have missed this rally. There will be obviously not as significant as you had before opportunities maybe, but you will have opportunities in the future as well. We just need a few confirmations like the CPI data coming today to validate a lot of our statements, and also the dollar to tell us where the market can head in the future.
Yes,
So
I think the
as
break of dollar index, I think the break of dollar index below 100.30, that will be crucial. I think that
correct,
might, further fuel the rally in
correct,
all the asset classes.
correct, makes sense. So it's so far so good. Waiting game for now. And yes, then we'll be able to confirm furthermore next week and probably see a longer rally run and can confirm beyond short term as well. Yes,
Yes, hopefully.
thank you. Yes.